All right, how's it going, y'all? Welcome to another episode of Systematic Investing. Before we get into any of this, let me just tell you, do your own damn research, and none of this is financial advice for educational and entertainment purposes only. So now that we got that covered, today what we're going to talk about is my 2026 broad market expectations. Okay, so usually I like to do this in the term of SP 500 price target plus a little bit of you know here and there about what exactly is going on and what the risks of the market are. So this kind of goes above everything else. You got to figure out what the Fed's doing. Guess what the Fed's doing? Printing money. We got some dogs running around out here. Chill, boys. But yeah, what's important above all else is the money printers running, guys. 40 billion a month started in December. So that just keeps liquidity. People, that just means there's always going to be cash. When there's cash, you can buy. You can buy, it can go up. So if you run out of cash, there gets to a certain point where there's just simply not enough money to keep the market. Yo, chill out, guys. Take it easy back there. Damn dogs. But since you have liquidity, you keep the market moving up. You get to a certain point in time, you just run out of liquidity. You just cannot get the market any higher because any money that's used to get in the market has to be sold out of the market. So when they print money like this, it just lets things just keep on going up. It's pretty great for the markets, honestly. Questionable in terms of overall economic policy, but for the market, great. And so we have the Fed meeting. Today is Tuesday. This tomorrow they're gonna have the press conference. Right here, I have the summary of economic projections from December Fed meeting, and I mean, as you see here, they upped their GDP projections, lowered unemployment projections only by zero point 0.1 in 2027, if that even really matters. PCE, they slightly increased it. I mean, so in reality, what we're looking at is a slightly hotter economy, honestly, is what they're saying than they saw in September. We're not going to get another summary economic projections this time because they only do that 5 times a year. So there's 10 meetings a year. Five of them are summary economic projections and they alternate. So this one's not going to have a summary. Um, oh, and sorry, before I touch on this, they the Fed funds rate they're calling for one cut in 2026 of a quarter percentage and another one in 2027 of a quarter percentage. In long run, they say they're going to have it at 3.0. So, you know, that's pretty tame. I mean, we're not going to see any new summary economic projections. Really, what we're looking for is some sort of signaling of change. In all likelihood, this is going to be a total dud of a meeting. There's not going to be like a bunch of trading actions or anything. Most likely, they're just going to say our economic policy will shift with the data and something stupid like that. And yeah, that's pretty much all that's going to happen. So don't expect too much going on tomorrow with that. But what you really need to know is that rates are on a downward slope and they're printing money. So, I mean, that in itself is a huge tailwind. What's keeping the economy going right now is the AI build out. We all know this. Like, if they stopped the AI build out today, GDP would go negative quick. Like, I mean, it's completely carrying the GDP of the United States. Oh my goodness, doggies, relax. Um, so until one of these three things happens, which will probably all happen at the same time if they do happen, so it'll get to a point you see like OpenAI raising $500 billion. They don't have $500 billion, as everybody knows, and like Oracle putting up 500, like hundreds of billions, if not trillions of dollars, are putting in these deals. All of these deals rely on them getting more deals and more debt, raising more debt in the future. Shout out to Meet Kevin for this. He kind of put me on this idea. So it's like you raise money, but in order to finish said project that they're talking about, they have to raise more money in the future. If they can't raise money in the future, all this shit is done. We're going to crap. Like, because that is signaling that the people who are investing in it don't see the potential upside return. And then it makes it harder to build these things. And then all the things that they started to build while waiting on more money is just going to get stopped. Like, it complete shit show if that happens. And that would cause rapid unemployment increase. And then number three, debt crisis. Everybody knows the US economy right now is leveraged to the moon. Like there's just so much debt everywhere. If that really starts to get calling big piece of debt here, it really can just spiral really quickly. Unlikely to happen. None of these three things are that likely to happen in 2026. You usually get some warning signs before something like that happens, but a warning sign will probably be that the AI companies are having a hard time raising more money. Like OpenAI, for example, has to raise so much money because they just bleed cash. So once they can't raise money, then they should be very wary. Valuations, they're pretty important, but right now, since the AI hype is so high, I mean, we're sitting at about 31. Doesn't really give us that much room for upside, you know. If we were like seeing that at like 20, like in 2022, that's kind of where you like, okay, that's where you need to buy. So kind of to me, this kind of signals the valuation, especially, and like the debt crisis risks and things like that. Kind of like just relax, like don't go crazy, don't sell everything, just relax. Okay. So I mean, as long as the things that these companies say they're gonna do happen, hey, just slow, steady climb, baby. We'll be chilling. But you know, as long as none of those risks really happen, I don't really I see just a choppy, slow grind up of a year personally, because with this valuation so stretched, it's on unless we just push it in a straight bubble territory and just blow this thing through the roof. I mean, it's not really going to hit like bubble territory, but it's also not cheap, but it's also not that expensive because there is a lot of growth priced in, and said growth is really likely to happen. So it's kind of tough, but I'd say slow grind up. And yeah, as a conclusion, you get the deficit spending when you're spending $1.5 trillion a year that the government doesn't even have, just borrows it and then just sticks it in the economy, plus the AI build out, plus the money printer. It's like how it's pretty hard not for it to not go up, like honestly. But you know, all the leverage and everything kind of makes it harder to get more liquidity because you need more leverage. But it's like without something big happening, it's really hard to see something the market really tanking. I mean, so yeah, my current projections, I'd say 7,400, 6% grind up from here. I don't see why we couldn't. I mean, it might. Let's put it this way. I don't necessarily think that on December 31st of 2026 it's going to be 7,400, but I don't really see it being too much lower, too much higher. Somewhere in that range seems right to me, just on a valuation basis and as well as like all the risks that we talk about. So even with a really good year of earnings, I really don't see it blasting through the moon again. It just doesn't seem that likely to me. But you know, watch play it by ear, guys. You just got to be prudent. Make sure. I mean, now with that said, 6% upside on the S&P before I get too far ahead of myself, that does not mean that there's not going to be deals out there, guys. Okay. There can be many outperformers on the market, many deals to be had, but you know, as it develops, you know, you just got to play them by ear, do a good individual breakdown on each one to find out good opportunities and go from there. All right, thanks for tuning in, guys. If you like the outside format a little better, I plan on doing some stuff on the beach, maybe even in the pool, maybe on the boat, something like that, you know, something to mix up the atmosphere a little bit. Maybe even have some fishing poles out in the back and see we can make some videos while we're out fishing. So we'll see what's up. Thank you for tuning in, guys. If you have got any ideas, just put them down in the comments. I respond to all my comments. Yeah, like and subscribe. Thanks so much. I'll see you next time.